far as the S&P goes, that is a Google textbook perfect bear flag, and it is starting to pan out. If the bulls had any chance, any opportunity, any hope, it was to make a higher low right here. They didn't. It's selling off, and I think it's just going to probably continue to get worse. It did gap up a little bit at the open, but we're selling off right now. So we'll have to see if this zone holds right here. I just don't think so. Man, it would be cool if we can get down to this weekly zone down here. Getting all the way down to that weekly zone, we already touched correction territory. So correction was 10%. That was that Monday wick where everybody sold off, blamed it on Japan, Trump, or Kamala, depending on, whoever you were watching. Getting all the way down to this zone, not quite a crash. To see a full-blown crash, we would need it down here in this 450 area. That would put SPY at 450, which there is a zone right there. That zone, full-blown crash, I just don't think we get there. I think the NASDAQ does. I don't think the S&P does. And this is what I said before. I said the S&P is going to correct 10%, and the NASDAQ's going to get to 20. So far, I think the NASDAQ went to like 17. We're almost there. But that's, again, I do think the stock market's going to get worse. That's not a clickbait thumbnail or title. But if you've been following along with any of the other videos, the last half of the sell-off, I think we're about halfway there. The last half of that sell-off, I think, is just scratching and clawing and fighting its way because you're going to have people like me. There's money on the side. And people love to use that money on the side excuse. There's just people, sometimes they want to buy the dip. There's the times where day traders think they're buying a dip because they're watching like some 1 minute or the VWAP, something crazy. But then there's real time frames, and no offense to anybody, but I'm on like the daily time frame. Where things get significantly cheaper or they're very much worth it. Might not be the bottom, but I like to buy things when they're down. So while everybody's panic selling, that's awesome. It just means I get to deploy the cash and get that many more shares. What part of that would be cool? It's cool because we get to buy more. This part always sucks. If you're not outright short, it sucks watching your money go down because every day feels like an eternity. It feels like it's never going to turn around, but we've done this how many times? And every time people get stuck in this, it's never going to turn around, I'm losing all my money, and they get emotional. No matter how many times you've shown them on the charts, it's literally bounced back. It's just taken months sometimes. Big deal. We'll sell options in the meantime. We can hedge it and go short. But, right now, I do think that gets a little bit worse. All right, so we got outside one standard deviation, reined it back in, and we're flirting with breaking it again. In fact, after hours, we already are. So the 2 standard deviation spot is 506.39. If we got to 506, actually, I probably will. I'll sell some 500, 498 put spreads just below that zone. And again, that'll be a credit spread. I just like the $2 spread, especially outside 2 standard deviations. If we can collect some money for it, I like that. NASDAQ. Now, talk about a sales pitch. If you had these magic yellow lines, magic yellow boxes, let's say you are a YouTube member and you use the chart link, you save it, and you have these boxes, you could have went long here, short here, long here, short here, long here, short here. So that would have been zone to zone 1, 2, 3, 4, 5, 6 times. And if you trailed it, you would still be in it. How crazy is that? As far as this goes, I know if you're bullish, what you really want me to say is we'll probably make a higher low and we won't go that low. And that the bottom is in. And some people were talking about the bottom being in. Because we rallied up and then we really started to hang out. Like, hey, maybe. But, like I've said it before, recently too, it's been a while before that, you can't make a bear flag without a green candle. So no sense in getting excited off just a little bit, especially after everything else. Now this, if you guys have been watching, then you guys know this was a rip your face off rally. This is just a relief rally. And that's basically the difference. One's an absolute berserk send it mode. The other one's like that little channel up, gets everybody all excited because it finally seems like things are calming down. And then they break it off in you. And then all of a sudden it's down. You wish you were short. As far as knife catches goes, I would go long this right here. So if I had any sold calls in tech, if we hit that zone, probably closing those because that's also a long play, buying back your short positions. Deltas wise, I'll get longer, right around here. If that breaks, RIP, from the peak to down here, so there's 17%. 20% puts us right here. Now that's officially a crash at that 16.5 mark. 16 flats, 22%. We make it to this zone down here, and I'm either going to be really rich or really hurting shortly after, because the allocation I would put into tech at that zone would hurt some of you guys' feelings. I mean, if we got that far, that's where I'm going with that. But for now, kind of have to just dodge as many bullets as you can on the way down. If you're remaining along, especially like a lot of my plays right now, I'm holding shares, selling calls against it. If you're on the Patreon, you're following the growth account, then you saw we've done it twice now. Sold a call against NVIDIA. NVIDIA dropped down. We bought it back. NVIDIA popped back up. We sold another. NVIDIA dropped down. So we've sold a weekly call, same expiration, twice this week. So I'll continue to do that on the way down. And you heard it here. Time to go long. But yeah, and to be clear, maybe you just only click the thumbnail and titles and all that, because people always seem to be, they get confused, and I assume they have the IQ of a paperclip, and that's okay. They'll show it off in the comments. They'll see the thumbnail and title of me saying it's going to get much worse, and then they'll hear me talking about how I'm buying it. And I get that could probably be confusing for some people. If you're new, we'll just leave it at that. If you're new. What I'm going to do is start accumulating, because I like shares when they do get cheap. Again, I'm going to start accumulating anything I buy now. Hate to say it, it's not that it doesn't have a stop. It's just that it would take a lot for me to stop out of these positions. Allocation wise, it's just not enough to hurt me. Would it move the needle? No. We have to bounce and send it to all-time highs tomorrow to really move the needle. But I want to accumulate now and just kind of slowly trickle that thing in. When I see us bounce, when I see that higher low, then I'll lean into these positions, but my averages will be significantly lower. Also, if you've been following, we sold that call on NVIDIA. We have not bought any Palantir shares yet. I did look at it today. So far, we've been selling the calls on NVIDIA, taking that premium and buying Palantir shares. I didn't earlier today because Palantir was up, and I checked it later at the end of the day, and Palantir sold off. But for now, I'm just going to sell the calls, and we may or may not buy shares. It will be Palantir. We're going to collect another 100 shares of that. But I don't mind not. I don't mind just selling the calls and keeping the cash. How long do you see this drawdown lasting? 1 month? That's a good question. Let's just keep it at this trajectory and see. Kind of a silly way to project things, but if we just stay at that path, September. Anything else going on in September? CPI next week we'll decide. I don't think so. I don't think CPI. I think CPI is probably going to introduce another leg, but I think right after that, I think it just switches. But, I mean, we'll cross that bridge when we get here, or when we get there, right? All right, breaking it down, going into that second standard deviation again at 417. This particular one, I would wait for it to get to 417, and then I would consider selling the, I don't know, maybe 412, 410 put spreads on these. They were talking about an emergency rate cut, which may ruin the fun. Define fun, Steve. Do you find rolling naked on glass fun, or like what's your level of fun? There's a lot of people talking about an emergency rate cut, and I don't know why. When has Powell ever come out and said, "Hey, I really care about the stock market"? And how many times has Powell come out and said, "It's not my job to worry about the stock market. I'm worrying about the people," and that whole end of things. You know what his job is. He says, "I don't think so either. Let it fall." Rate cuts cause markets to drop. Yeah. I know everyone thinks a rate cut will be bullish, but why are we cutting rates? Because everything's fine and dandy, or it's raining outside? They will just dump the mess on the next guy. Oh man, that's like a politician's special. Especially all these guys that are like, what, 116? They've been in politics since slavery, you know, and they're 1 foot out the door, I think. I think they're ready to just like inch it along and say, you're up. All yours. 25 cut is expected. If it's 50, look out below. Yeah, I've heard people even say a 75 basis point cut. Not even 75, but 2 75 basis point cuts. If they come out swinging like that, one, just know I'll be rich because I'm short the U.S. dollar. But I might have to take some of those funds to help out my stock account because, yes, like you said, look out below. At that point, that is a sheer sign of we are unhinged and that ball just got let loose. It's rolling down a hill. But Steve, to Steve's point, he said it'll ruin all the fun, ruin all the dip buying. They get crazy with this. There's gonna be plenty of dip buys. Was that guy Kevin that said 75 base? No, and I hate that this is public. I don't know why Kevin's getting brought up in our chat a few times. I don't mind it when I see like one of his videos and someone has a question about it, but it's not. Kevin's getting better, but Meet Kevin's goal is really just to get views. It's not really anything else. He has a business to run, so it's the clickbait thumbnails. He's got a coupon expiring, a flash sale. It's gonna end tomorrow. But don't worry, there's another one that's probably gonna end the next day. Like he's just a YouTuber. That's it. He doesn't make his money from trading. So he'll say a lot. That's why you get a lot of people on his comments saying he's a flip flopper and he changed his mind and all that. Just. Yeah, I don't know. But I don't want to have to keep talking about Meet Kevin. I really don't. Because it puts me in a position to either disagree and explain why he's wrong. And he's also not on the channel to even have that conversation, so it just feels weird. If it's 75, I'm definitely moving with Cody. Yeah, let's move on. The JD Vance of YouTuber. I don't know who JD Vance is. Anyway. It is, I will say, it's kind of refreshing when someone talks about Meet Kevin and the other half of my chat has no idea who he is. I do like that. That's nice. But, you know. Anyway, let's move on. The Russell rotating into that boot. And by boot, I mean a mud stomper, stomping a hole in anything you bought because of that rotation. Now, I highlighted this yellow, and I did say it's worth a buy. So I said this yesterday, day before? With my mentorship group, we talked about this zone right here. Now, the Russell's incredibly sideways, and I want to talk about why I made that bright. Because if I ever make a zone bright, just know that's where I'm paying attention. That's what I want. Case in point, the Bitcoin. We've got a great bounce. As far as the Russell goes, there's some specific set of rules with this. I would buy some Russell futures, assuming we hit this zone midday, late morning. I'm not buying this in extended hours or even approaching it, and that's pre-market or after hours. I want volatility. I want volume. I want all the players on the field if I'm going to be buying in this zone, and I want to do that because if this does bounce, my stop's going to go in the green, and I want to take my risk off the table and forget about it. In case we kind of do one of these where we bounce up and then just kind of come right back down, we'll bounce up because there's 3 or 4 buyers there, and I'll just be one of them. And when it comes back down, I'm not going to be the other one, and I'm just going to end up being a seller. Futures, if you just trade stocks like IWM, that move is probably going to mean nothing to you. It's going to be pennies, few bucks. Futures, that can actually make some money. That's quite a big zone for people that trade futures. So that's where I'll be at with that. As far as the Russell goes, we're right at the expected move. Largely led by financials. Financials really leading the way on the Russell right now. So it gapped up, jumped up, hit that zone, sold off. It looks like it's going to continue at this point. Bear flag. I'm not short the financials, but I don't. I kind of hate shorting tickers that look like that, at least. But if you said, hey, I'm shorting the financials, I don't know how much of a comeback I would have other than like, hey, do you have a plan, which is entry, an exit? Where do you think it's realistically going to go? And then capital-wise, what if it gaps around you? It stops, options, risk, and capital. Or are you going to try that? I'm going to stop out nonsense in an options contract. Maybe you want to go theta and vega neutral and grab a spread. There's a few ways to play that. I don't think I am, but I just even sitting here contemplated it. Tesla. Now, I did sell some Tesla puts today. Some of the chat was a little bit, they had some questions about it. I sold the 200 strike puts for this Friday. They were $4 something a piece at the time, and they were right at the money. So I just said, give me money or give me the shares, but just give me one of them, if not both. So now some further questions was, am I going to take assignment, take an L? In this, I will take assignment on. So at that point, I'll have all the shares. Why is the expected move not updated? Did I forget that one? 192.80. Hang on. And 254. All right, so we're outside the expected move already. 177.93 is 2 standard deviations. Just below that zone. Now, if you've been following me for a while, then you saw me back here selling. I was selling the 160 strike puts. Thought so. Came right back up. It was 160 for a while. Then I sold 170s, 180s, 195s. I just could not get assigned shares. And I was doing 3 weeks out, as in this Friday, next Friday, and the Friday after that, and just continuing to keep it going. It went on forever. So I wanted to get the shares, so I went out and I like to get paid to trade, so I did sell those puts. And outside of a rip-your-face-off rally or something coming in hot the last couple of days, I think I'll get the shares this week.